What's going on, everybody, and welcome back to the channel. My name is Bailey Kramer, and I'm a real estate investor and Airbnb host. And in today's video, I'm going to be walking you through how I was able to get a mortgage at just 22 years old without any tax returns, without a W-2 job, and without getting somebody to co-sign on the loan for me. So without further ado, let's go ahead and jump in. All right, so I'm going to take you back to 2022. I just dropped out of college and decided to go all in on real estate. At the time, I had a successful co-hosting business that I was running, so I felt comfortable making the jump into full-on entrepreneurship. Then once I started saving money and had enough to actually buy a property, I started to look into different financing options that I could qualify for. Every bank that I would call would ask me if I have a W-2 job, and they'd ask me for my tax returns. I just dropped out and I was running my own business, so I didn't have a W-2 job. And since I was in college and I didn't have any true work experience before that, I didn't have any tax returns to show. So after calling dozens and dozens of lenders, I finally figured out a loan product that I could actually qualify for. And it's called a DSCR loan, Debt Service Coverage Ratio loan. It's essentially a loan where they don't look at your tax returns, they don't look at your income. What they're really looking at is two main things. The first thing is they're looking at the property itself. They're saying, okay, this property you want to buy, will it cash flow based on how much rent it could bring in versus how much the mortgage is going to be every single month? And then the second thing that they look at is your credit score. Basically, the better your credit score, the lower the interest rate. The worse your credit score, the higher the interest rate. Now, for my first property that I bought using the DSCR loan, I had a pretty decent credit score, it was in the 700s, and I got an 8.5% interest rate, which at the time, everyone else was getting around 7 to 7.5% interest rates on typical standard mortgages. Now, I was comfortable getting a higher interest rate because if I waited 2 years to get 2 years of tax returns to qualify for a lower interest rate, I would have completely missed out on the opportunity to buy this property. So I bit the bullet and bought the property at an 8.5% interest rate. Another common question I get is, well, Bailey, what kind of down payment do you have to put down? And for my first property, I had to put down a whopping 30%, which was not fun. But for the second property I bought using the DSCR loan, I only had to put down 20%. So that's just something to talk to your lender about. Now, I know a high interest rate loan does not excite people and oftentimes gets them scared to even jump in. But let me tell you my philosophy behind it and why I'm comfortable with it. When rates go down, I have the option to refinance my mortgage at the lower interest rate. And in that case, it'll lower my monthly payment. But if interest rates increase, that's okay for me because my loan is locked in for 30 years. So if you're also somebody who can't qualify for a standard mortgage, I highly recommend looking into DSCR loans, and I'll even leave a link to the lender that I use in the description below so you guys can check them out. Or feel free to just look up on Google DSCR loans and call different lenders. I hope you guys got value out of this video. If you're someone who gained value out of this video, do them a favor and send it to them, and I'll see you in the next one. Peace.